Welcome back. Well, good time to get you some derivative strategies. Rajesh Palvia, Vice President, Technical and Derivative Research at Axis Securities joins in. Hi, Rajesh. Good morning. Wishing you a very good new year and a rocking 2023. Tell us, what do you have for us in terms of strategies?
Morning, Nigel, and wishing a very happy new year to CNBC-TV18 team as well as the viewers, all the viewers. Looking at the data setup, we believe that market is going to remain in the range 18,000 to 18,250 could be the possible range for some couple of trading sessions from here onward. As we look at the data, 18,200 has witnessed a call writing activity again in the previous trading session, so which is likely to act as a resistance area for any upward momentum. But on the other hand, 18,100, 18,000 are having a strong put base, which is going to act as a good support area. So our advice is, if any dips comes near to 18,050 is a buying opportunity. So to play this move, we believe that one can buy 18,100 call option, which was closed at around 127 in the previous trading session. But we will advise to buy at around 105. If it comes near to those level, one can buy 18,100 call option. Keep stop loss of 85, and again we are expecting that upward momentum is likely to continue again if any dips comes from those level. So 18,200 we are expecting on the higher side, so one can book this call option at around 150 160 zone. On the stocks front, we believe that PSU Bank can continue further. We have seen a strong long built up in the Canara Bank, and looking at the overall setup for the Canara Bank on the technical as well as on the derivative front, we believe that Canara Bank can be a buy. One can project a target of 345 to 350. One can keep a stop loss of 327. Another stock which we like from the fertilizer space, that is Chambal Fertilizer. Short covering action has been seen in the previous session, and looking at the overall setup for fertilizer sector, we believe that Chambal Fertilizer can be outperformer. One can buy Chambal Fertilizer for upside target of 325 to 328. Keep stop loss of 306.
Okay, Rajesh, thank you very much indeed. And like Nigel told you, have a great 2023.
Thank you.
We have to concentrate back on the markets. The pre-market, pre-opening rates actually looking a little positive, unlike what SGX Nifty told us. And among the shining stocks are the auto stocks. Stamo is starting with about 1.8% higher. Ashok Leyland likewise. Sonia, can you just revise the key takeaways from the auto
So the big thing that really stood out for me is the strong sales in medium and heavy commercial vehicles. Not overall CV sales, but MHCV sales are coming back in a big way for all three companies, Tata Motors, Eicher and Ashok Leyland. Tata Motors MHCV sales were up almost 35%. Eicher Motors total CV sales went up by 17% and Ashok Leyland up 45%. Now buses have come back in a big way. Of course, that's because a lot of state government bus orders are picking up, as well as now schools have opened up, offices have opened up. So bus segment is looking very good, especially for Ashok Leyland. And Tata Motors says not just that, passenger carrier demand has picked up quite a bit, which is of course buses. There's improving fleet utilization. There's a pickup in road construction projects and an increase in cement consumption. So this pocket is what I'm watching today at 9 a.m. All three stocks are doing pretty well. But let's also talk about a momentumizer segment. Nigel, what are you looking at?
Well, there was a couple of stocks that moved pretty well on the final day of the year last year. And Swan Energy, we don't normally talk about this one. It has a market capitalization of around 8,000 crores or thereabouts. The stock ended at its highest levels that we've seen since May. Remember, its 52-week high as well was made in May. And then from there on, well, the stock did see a bit of a downtick out there. Now, it was backed by high volumes as well as delivery as well. So the traded volumes on Friday, well, they were nearly around 4 times of what we saw on average in the previous 10 trading sessions. Even on the delivery front, the delivery volumes were much higher. So that's why, in fact, the up move was backed by a good amount of volumes as well. The recent fundamental news that I saw on the BSE in the past week was that the NCLT, they've approved Swan Energy's plan to acquire Reliance Naval as well as engineering. So I don't know, whether or not the street is viewing that very, very positively. But the stock did well. Technical levels you're looking at, well, on the downside, the 20 DMA is important if it can hold on to that level. On Friday, yes, it ended higher, but it did come off the high point of the day of around 320 plus, ended at around 305 rupees. So just one stock that saw a good amount of volume as well as an uptick. So we're highlighting that one.
Okay, that's important, Nigel. Power stocks anyway, even Tata Motors we saw, Tata Power we saw, had a good last few days. Well, let's invite Prakash Devan again. Prakash, thank you very much for your patience. Power stocks, would you venture into any of them?
I don't see any reason why power stocks would not reward investors this year. We've seen this huge, industrial impetus in industrialization across the board, Lata, and especially when cap goods start seeing a very clear pickup. There's no reason why the power offtake doesn't go. Now, the key challenge out here is what is it that you pick? Whether you pick the distributors or whether you pick the ones that are producing power. And there are some models which actually straddle both very effectively, right? So we've seen today there was news about Torrent acquiring an asset which is on the renewable side. So there's going to be this clear indication vacillation towards the renewable side for most players, and how cost effective that happens is going to be dependent on how their purchase agreements are. So my sense is power is going to be quite tricky in that sense, because the variety of available opportunity is huge. But going back with your this thing on Tata Power, and as a disclosure, I do have exposure to this name. It's a business that's got so many things going for itself. And at some point, the deleveraging effort that the company is undertaken some time back is actually going to start reflecting in the profit numbers as well. So there's this huge element of transformation that's happening internally on the balance sheet and on the business as well externally. So both that is something which will be at some point reach a convergence that will be very promising, is my sense. So I would look at something more stable like that. But then if you just want a pure renewable play, there are lots of names, although a bit smaller, which could kind of deliver, especially on the solar side, not as much on wind. But there's lots to pick. Maybe some other day we could discuss, because these are very small companies, 1,500 crores, 2,000 crore market cap, which could probably be the players of the year going ahead.
We'll take that rain check from you, Prakash. You've given us a great theme. So mid-cap energy sector, power sector stocks, that theme for another day. Hope you have a fabulous 2023 yet again.
Thank you, Lata. Thank you.
Okay, now we spoke several sectors with Prakash, metals, autos and energy. But really the sector that has been the cynosure of the markets all through 2022 was the banking sector, banking and finance. So let's invite the lead banking sector expert, ASV Krishnan. He's the lead BFSI analyst for HDFC Securities. Thank you very much, Krishnan. First of all, wish you a very happy 2023. When everyone says financials is a buy, the contrary can happen. But do you think this time consensus is going to be right yet again? 2023, year of BFSI?
Yeah, hi Lata, very good morning, and wish you and your audience a very, very happy new year. When everything seems to be very rosy, obviously we tend to look for red flags. As of now, close of play December 2022, it seems we have navigated the period fairly well. From an asset quality perspective, I think it still remains a very benign cycle. But I have a feeling that we might have exited the peak growth, peak margin quarter now. That's our sense. This was probably at about 18% loan growth, 9.5%, 10% deposit growth. Something has got to give. So I think growth, the base will begin catching up, and that's why we are probably exiting a peak growth, peak margin quarter in a sense.
Okay, all right. Hi, Krishnan. Morning. Then how do you approach stocks? Before I ask you what looks good to buy from here, which are those stocks that have run their course and you believe like taking some money off the table will be a prudent strategy?
So we've generally been heavily leaning on private sector banks. Structurally, obviously, they have certain advantages. The PSU banks had a handicap. Having said that, there's no disputing that there could be a temporary reversal in market share losses for PSU banks, because they are well capitalized thanks to the cleanup that happened over the last 2-3 years. And they are deposit heavy at a time when there is a scramble for deposit for private sector banks. So I think PSU banks are the ones where we have seen significant amount of rally over the last 3 months now. We believe there could be some reversal there. We remain heavily leaning towards the private sector banks. Our top picks have generally centered around ICICI Bank, Axis, SBI, and Federal.
Okay, but just to scratch that point further, it's not as if PSU banks didn't do well. The one-year gain in Bank of Baroda is 127%, top performing stock actually. Union Bank is up 86% year on year. Bank of India up 73% year on year. And then Canada Bank up another 70% year on year. So you think there's still more juice?
So they've done well. You're right, Lata, which is exactly the point that we were trying to make, that, we keep looking for evidence with that when that trade might peak out. We haven't seen any even early evidence of that yet, to be very honest. I think the PSU banks have been extremely aggressive in chasing growth thanks to the cleanup that they have had. And you can see that in terms of aggressive pricing across asset classes. I mean, you have smaller PSU banks which are now pricing their home loans lower than a State Bank of India, right? So that's not going to be sustainable throughout. We believe at some point of time that trade will come to an end. But from a very near-term perspective, we don't see any evidence of that reversing yet.
I request you to just hold on to that thought. We're coming back to you. For the time being, just request our viewers to look at the bottom of your screen. Bajaj Auto's numbers have come in and the exports continue to struggle. So on a year-on-year basis, it's down by close to around 40%. The domestic number on a year-on-year basis is up close to around 2%. But in comparison to Nomura's estimates, well, it's missed those estimates by roughly around 5 to around 6% or thereabouts. For the time being, the stock is likely to open up more or less flattish, but a bit of a miss out there. Nomura was factoring in a number closer to around 300,000 odd. It's coming at around 281,000 odd, so keep an eye out on that one. But before we go back to Krishnan, Sudarshan joins us to give us his 9-10 call. Sudarshan, go ahead.
Well, the Nifty is choppy. Take intraday trades in the direction in which intraday momentum flows. CanBank is a buy with a stop under 321.
Okay, all right. And Mitesh, what about you?
I will choose a sell on Britannia with a stop at 43.35 and targets of 42.30.
Okay, thanks, gentlemen, for giving us your 9-10 call. Well, Nimesh joins us to give us a standout brokerage report. Well, Nimesh, and this time it's on the metals pack.
Yes, Nigel. So the first upgrade for 2023, and it's on metal names. So after being cautious for almost a year, Jefferies has today upgraded both Hindalco and Tata Steel to buy from hold, and they've raised the target price as well. So on Tata Steel, the target price is now raised to 150 versus 95 earlier, and on Hindalco, they've raised the target price to 600 versus 390 earlier. So big upgrades on both these stocks. Now, they believe the key reason for the upgrade is, one, they expect the China to start easing COVID policies and also focus on supporting the ailing property sector. Both is positive for the Indian steel stocks. Now, they believe the worst in terms of margin for the margin quarter for Indian steel companies and a big earnings cut for both Hindalco and Tata Steel are now behind. So worst is in the price, and the Tata Steel is a preferred pick for Jefferies in that metal names, largely on back of attractive valuations plus improving asset footprint and balance sheet. So big upgrade on both Tata Steel and Hindalco. They've upgraded the stock to buy now and sharply raised the target price as well.
Okay, thank you very much for that. Nimesh, Jefferies actually would be the third today speaking about metals. We had a very strong comment on metals from Arvind Sangur as well, and later on Prakash buttressed it from the Indian angle, speaking strongly about Hindalco, if you remember. Yeah. And now here you have, as you say, a standout brokerage report coming in from Jefferies. So watch out for the metal stocks. Krishnan, ASV Krishnan of HDFC Securities is still with us. Krishnan, would you spare a thought for the NBFC guys now, or has life just gotten a little tougher for them?
So cost of funds wise, I think it's a little tougher. It's been a little tougher. Obviously, the marquee names in NBFCs are the ones where you want to probably park yourself and find places to hide when that environment comes in. But today, asset quality does not seem to be an issue. Pricing is an issue. Yeah.
Okay. So if you, if you can discuss stocks, then what would be your hierarchy?
Our pecking order in NBFC is SBI Card, Chola, and Credit Access Grameen.
No, I meant. Okay. Anyway, thanks for that. I meant in the overall BFSI, what's the pecking order?
ICICI Bank, followed by Axis, State Bank of India, and Federal Bank. Those would be among the banks, and among NBFCs, it would be SBI Card, Chola, and Credit Access Grameen.
Okay. Well, thank you very much, Krishnan, for joining in and speaking about the banking sector. So good going, but the pace of growth that we saw in 2022 perhaps cannot be maintained in 2023. Credit offtake going from, sub 7% to 17.5% by the time we come to December is a huge increase. Likewise, margins of practically every bank rose by between 25 and 50 basis points. So that pace cannot be maintained, but it could still be a decent year compared to other sectors. That's the word coming in from financials. Well, we just have a few seconds for the markets to open. And it looks like no man's land at this point in time.
Well,
right?
that's right, Lata. In fact, it's a positive surprise because the SGX Nifty is suggesting a 40-50 point downtick. At least for starters, we'll open up in the green and a good start to 2023. That's what the first tick is indicating. The Nifty is up 25 points odd. And let's get straight to the top gainers then on the Nifty itself. Tata Steel, that's up close to around 1.5%. Nimesh has highlighted that Jefferies, they have upgraded the stock after being cautious on the metals pack. So that's one of the big gainers. Hindalco as well was upgraded by Jefferies. So both those two stocks, they're off the blocks in style. Both of them up close to 100%. Tata Motors reacting to its number. So that one is higher in trade. On the flip side, you have Bajaj Auto. That was a bit of a miss on their performance. So that one's opened up with a cut of close to around 1%. Maruti as well did miss estimates. So that's opened up on the back foot with a cut of close to around 1% or thereabouts. So in the broader markets, well, a couple of stocks should come up for you. Let's pull up NBFCs. They've gone ahead and increased prices. So that's opened up with a gain of close to around 1.5%. Moil as well has opened up well in the green. So that stock comes up for you on the screen. Good opening out there. MCX, well, they're continuing with the software usage of 63 moons for the next 6 months or so. The street has taken that not very pleasantly. The stock opens up with a cut of close to around 5% or thereabouts. A few more important stocks that are moving around. Religare, well, a step in the positive direction. That one-time settlement that's finally got approved. So that stock has opened up well in the green with a gain of close to around 2% or thereabouts. So good start to trade, Lata. Quite a few stocks opened up well in the green as we speak. And the Nifty moving to around that 18,150 odd mark with the Nifty Bank up 115 points.
Yeah, I think the important achievement is that it is in the green when the global cues, whether it was Wall Street close or whether it was crude or whether it was US yields, were actually pointing to some bit of red, including SGX Nifty. But we have managed to pull up, and especially the mid caps doing extremely well at this point in time, 0.5% higher, and that means 4 stocks in the green. For one in the red, the Tata Group is having a good 2023 start. Besides Tata Steel and Tamo, which are in the green, among the big caps, Tata Communications also is doing well. So a bunch of Tata stocks doing well at this point in time. But let's get one of our favorite experts to start 2023, our market master today, Samir Arora, founder and fund manager at Helios Capital. Good morning, Samir. It's always a pleasure and great to have you with us to start.
And great to have you with us because I don't see you that often these days.
Okay. You're actually standing in for Prashant. People are taking holidays in relay, so I'm stepping in. No, I'm always available if you are ready for a chat. A pleasure speaking with you. Anyway, what does 2023 hold for India? India was the outperformer in that we were up at an index level 4%, whereas the US indices were pounded with 20% losses, 30% losses. Should we continue the good run here?
Well, we should have a decent enough run to be happy ourselves. In the sense, it's possible this year, let's say that China goes up more because people think it's a rebound. But India itself will also do well in that situation. And if the rest of the world does badly, then we will surely outperform. Overall, I think this year, I am starting in my mind on a positive note because if I see the current issues, mostly related to US inflation and now maybe the COVID in China, the US inflation thing has been going on for quite some time. And in the next 2-3 months, I think by March, they would have finished their hikes and then they would pause for a long time, maybe the whole of this year. But at least it won't be hopefully incrementally negative news. And the China COVID situation, unless it happens to be some variant which is much more scarier than what we have seen, then we have seen this kind of a thing in India and previously in Europe and many other places where it'll run itself out in 2-3 months. And then there'll be massive unleashing of Chinese consumption and travel and all the things that we have seen in other markets. So I think plus minus 2-3 months, both these things would have played themselves out. And therefore, I think this year, at the end of the year, will be higher than today.
Okay, all right. Hi, Samir. Good morning. Nigel on this side. Samir, what about that India versus China factor? We had a good, year in 2022. China was behind us. Suddenly, that reopened trade, valuations, etc. Are you in that camp that believes that China will outperform us?
So China, it's already up some 30% from the bottom in October. And let us say it outperforms, which, sometimes what happens is, let's say you are doing Infosys versus Satyam, and then Satyam has a scam and the stock falls 80%. But then for the next few weeks, normally the Satyam would have outperformed after hitting some 10 rupees from a starting price of 180. It doesn't matter much to a long-term this thing. I don't think in the long term China will outperform. But let us say that there is some possibility that people, because they have put so much money into China in the last 10, 15 years or whatever, they won't easily quit and they'll want to play one more round. So even let them play. I don't think it'll be so much at the cost of India. It'll be that, okay, the overall basket has gone up. That is, say, the emerging market basket or Asian basket or whatever, but mostly the way they call it, emerging market basket. And then India may underperform a little, doesn't matter. Actually, in the longer term, I don't think it will. But, when you fall a lot, the rebound can be, quite sharp. Who knows?
Okay. Yeah, but really comparing them to Satyam is taking it. That's
dramatize it and explain it to an Indian poor.
No. Most interesting. But calling that big nation a scam is
historical premiums you are not supposed to see.
No, I take your point. Yeah. No, I take your point that, when you're losing after having invested in 1998 or something, that might bite. I take your point completely. So a bit of a rebound is...
My point is that people say India is trading at a premium to China and this is a record high. That is not because both these countries were performing and then after some time you realize, the Indian market seems to have massively outperformed. It is because China had specific policy issues, COVID issues, whatever issues, and therefore it fell. So it is one-to-one with that, and not so much that both the markets were naturally performing and then suddenly somebody's betting on mean reversal.
Fair enough. Take your point. Now let me come to within India itself. The big bet that everyone had was financials, and they have, obviously fructified. Do we continue to play? That seems to be the consensus. Every brokerage report speaks about financials yet again. We continue to play that bet?
We continue to play that bet. And because I saw your previous interview saying the consensus, the way to do it, then I said, what will I answer if she asks me? And the point is, if you look at the tech sector in the US for the last 7, 8, 10 years, every year you knew Google will do well and Amazon will do well. And they continue to do well for 7, 8 years till they didn't. But I think India, the situation is that this is clearly on a relative basis, one of the better sectors, not just now, literally forever.
Yeah.
Broadly talking about the private sector, this thing,
Yes.
like HDFC Bank, Kotak Bank, even Axis, ICICI broadly have done very well, even in long term. So yeah, that sector will do well. Also, if you say separately that the risk today is that whether the US problems are completely over, whether the EU problems are over, which means the IT sector, which is facing that market or that economies. So I would think a locally oriented sector, which is financial, is better even from that angle.
Okay.
All right, Samir, but what about HDFC Twins? A couple of those names, Kotak Mahindra Bank. 2022 was a bit of an off year for them. You expect them to get their mojo back in 2020?
HDFC was not an off year. Now it was up 11% or something.
7%, 7 to 8%.
10.5%, whatever, something. But it was in line with the market or a little ahead.
Yeah.
So actually, at least after 2 years of underperformance, did not underperform the market or mostly anybody's NAV this year. Last year, that. I would think HD. So one more thing is that when we say that the world is overweight and it's a consensus bet, the financial sector itself, that is excluding for the foreigners HDFC Bank, which is still zero in the index, and which is now maybe 5% of the market in absolute. If you do say 100 odd billion by whatever 2.5, 3 trillion market cap. So that 5% underweight is what makes the people feel that they're overweight. In reality, they may not be that much overweight if HDFC Bank had its rightful share in the index. Okay. We are going to bet on that. We have the 3 banks, HDFC, ICICI, State Bank in nearly same number. And we also have over the last 4-5 months because we sold off IT in whatever August or so. We have Axis Bank also now. So we have 4 banks and there are only 4 or 5 banks in the sector. In the big.
Got it.
Okay. Samir, hi, morning. This is Sonia. I just entered the conversation, actually had to step out for some work. I missed your New Year resolution. What was it?
No, I didn't say I have a New Year resolution. My New Year resolution is that we implement our mutual fund license properly and do well with it. But there's no resolution.
Oh, that's a nice one.
I thought it would be something to do with health, with the kind of,
Samir's been playing
fitness.
tennis.
Yeah, with
Samir's
the fitness
been playing
pictures
tennis.
I see on social media.
No, I just played in the morning, but that is because it coincided with the weekend. I play every weekend for the last 10, 15 years. So that is not a resolution. No, there's no new resolution except to be able to hold on to the old resolutions. I made for one day a resolution that I will read more books and see less of Netflix and Amazon after seeing that Onion movie, but that also I broke yesterday.
Okay, wrong movie. You picked the wrong movie. But I just had one follow-up to the point you were making earlier, where you said you've sold off on IT and you're holding on to some banks. But I mean, I don't remember the last time when you had an opportunity to buy some of these large cap IT names 30-40% cheaper, right? Don't you think that at least you should start nibbling into these names, or are you still very cautious?
Nibbling we might do. I mean, the point is, right now we have 0. But nibbling we might do. But the thing is that these guys have to still properly disappoint us. The stock price is one thing. But right now they are not. I mean, I think from this quarter, they will start talking about lower numbers and stuff like that. So far, they've been saying that we will get this project and we'll get cost-related projects and other things. But if you look at the US companies, you look at them in cloud, in security, in everything else, these business software like Salesforce, every one of them is having slowdown and the stocks are down, whereas and then EU and then UK. So I think that I may nibble, but I won't nibble before March, April, when we start thinking about them giving guidance for the year. They are not going to do anything great in Jan for me to feel that I have missed out. Plus, I'm not sitting on cash. So it's a relative trade I'm playing, right? That I've even bought Paytm, by the way. So I bought Zomato I had. So point is, it's not, we are just betting on a relative thing that which one can go up 10% more than the other.
Okay, now this is telepathy. Huh? You spoke about Zomato. I was going to ask you that. In your Twitter, you had mutual funds mangoing Mafi from their investors for investing in several of the IPOs. Is it comeback time at all? If you have Paytm, would you also go to the others, Nykaa, PB Fintech, Zomato, all of them?
Zomato we bought before. Zomato we bought 4-5 months ago, whatever the June quarter. Paytm was after the last quarter. So, no, right now we have only these 2, but we bought a few IPOs ourselves. These new IPOs, which are all down, I think one of them is not down. Fusion is not down, I think. But UP Parts and Fusion, but these are all like plus minus 0, because they're just very new IPOs anyway. So they've not had a chance to go down in case they have to. Hopefully they don't.
Samir, one more name you mentioned, right? The last time we chatted, Zomato, Paytm, and we're looking at one more from this new age themes.
We're looking at PB Fintech, but we didn't buy it. We haven't bought it.
Okay, got it.
Okay. You know, the big theme, like we have just discussed, was financials. Is there any sunrise theme? I mean, today morning, many people spoke about metals.
Metals doesn't fit our big picture theme in our life because we have never been able to do well. So when we feel that the theme has done very well and is irritating me, then I'll buy a little and then it'll stop performing. So we don't want to stage yet.
Okay. I just want to mention Bajaj Auto. The numbers just came out a while back and the sales are looking really weak. The December wholesale numbers are down 22% at 2.81 lakh units, and this is the lowest we've seen since May of 2022. And there's a big gash. Exports are hit very, very hard. It's a 40% slide that Bajaj Auto has seen in the export numbers. And Samir, you know, this brings us to the point. I mean, last year, the biggest loser in the auto space was Tata Motors because of their exposure to China and JLR there. Bajaj Auto has been getting very hit, badly hit because of what's happening in the export market. Do you completely stay away from these names? Do you focus domestic? How do you look at the auto market? I know that you've been negative on autos for a while, but if someone I would like you to play the last interview where you were worrying about FOMO on not buying auto and it turned out to be JOMO. That's why I'm missing out.
at least from June, July onwards. No, we don't like it because, see, first we don't like the two-wheeler at all because it is getting disrupted, and I don't deal with disruption properly in terms of how much to analyze. It is being disrupted by EV, that EV is not being made by the same guys. Today we read even JSW wants to go into EV, and that also four-wheeler EV. By the way, as you may have realized, that Tesla today has a lower P than nearly every Indian auto company. Now you tell me, although I don't like Tesla, I don't own it, even though I own maybe 40, 50 US stocks, but for having Tesla's P to be much lower, or actually nearly 1/3 of Maruti, if I remember right. So that kind of thing is a bit too this thing because these sectors are getting disrupted. Why should I go in and play a sector where there was a confusion whether how much of this was pent-up demand and how much was genuine demand for that year and how to take it going forward? We are not negative on the market or anything. We say we think that sector will underperform this sector. That's the way you can move on and be, positive or every day about the stocks that you own without. Maybe auto does well, but we think our stocks will do better.
Okay. So we leave us with one big idea for 2023. Something you're nosing around and may pounce on.
No. That way, our thing is very simple, that we buy 20 stocks and bet that the pool will do well without exactly knowing whose turn it is next. So the best example to see that is if you see in 2021 December, did anybody say that by Varun Beverages we turned out to be up 125% or Lemon Tree turned out to be up 80%? Nobody knew. Nobody can imagine the extent to which stocks can do well. So my one point idea on which I'm going to do a talk is people think that if they buy an idea, that if they have not done well, if they haven't researched it to the 100% and therefore are not willing to own less than 5%, they may have not done enough work. Sometimes the serendipity works. Sometimes the fact that stats work, that some 30-35% of the stocks do very, very, very well relative to the market. And you have to try and get a larger part of your portfolio there without exactly knowing whose turn it is next. How could you have imagined that Indian hotels will be up 70-odd% in a year? And if you believe that you will only buy stocks where you believe they'll go up 70%, you would never have bought these three stocks. Yeah. But when you 2% like we did, that was enough. It didn't matter that we did not buy 10 because we never imagined that these stocks could be up so much, so fast in a bad year otherwise. That is the trick.
That's a great lesson. Serendipity also works. That also indicates a very humble lesson that we should be prepared for these accidents.
Not accidents,
pleasant surprises. Okay. Samir, have a great 2023. Thank you very much for starting it for us with Elan.
And that's why I wore a green coat also in the morning, which I will take off now.
Okay. No, you can keep it on. For the sake of the bulls, you can keep it on. All right, Samir. Hope you continue to have JOMO and not FOMO in 2023. Thanks for joining in. But MCX is one stock that has nosedived in opening trade. If you're wondering why, Surbi is standing by to tell us more about that. Surbi.
Hi, thanks for that. So over the weekend, MCX announced that it extended the service contract with 63 Moon Technologies for another 6 months. Now, they were supposed to switch to TCS as a service provider, which would in turn reduce their operating costs. Now, Morgan Stanley has written on MCX with a target price of 12.20, which is a downside of close to 20% from its current market price. And this is because they think that the switch to TCS will now not happen until Q2 of FY24, which will increase the cost estimates in the short term. They say that they expect stock to trade at a further discount because of sluggish relative earnings progression. Average daily traded value is a key driver for MCX's profits and share price. In December of 2022, the ADTV was down 8% on a month-on-month basis owing to weaker volumes in the commodity futures. Now, they are valuing MCX at 28 times September PE versus currently it's trading at 41 times PE.
Okay, Surbi, thanks a lot for that. Well, let's move on. One stock that is under pressure is Bajaj Auto. That's because the company has reported very weak sales in the month of December. These are wholesale numbers, remember. There's a nearly 22% decline that we're seeing. Domestic sales are slightly up about 2%, but the biggest blow has come in the export segment. That's declined by 39%. Generally, the month of December, the wholesale numbers are lower because, people don't want to sort of stock inventory of the previous year. Inventory levels are low as well. But let's find out what the trend is for the new year. Rakesh Sharma joins in. Mr. Sharma, good morning. Happy New Year to you. What is really alarming is what's happening in the export market. I mean, the wholesale numbers are down by 40%. But tell us about what the trend looks like as we head into the new year.
Good morning, Sonia, and a very happy new year to all of you. Well, the export story is still the same, which we've been discussing over the last 5-6 months. Ever since, there has been that disruption in March-April period related to the dollar. The emerging markets have been severely hit both on the availability of the dollar and the devaluation which they have been facing. And as a result of which, trade has reduced, retails have declined, and we have to manage channel stocks. So shipments were also reduced. But like I had mentioned, we seem to be bottoming out now. The free fall which we were experiencing in the April to June, July period has now sort of leveled off, though it is about 25-30% below the peak levels of last year. And I think the consumers are slowly digesting the higher retail price as the availability of dollar improves. And, key markets like, let's say, Nigeria, where there is a very important event of the elections, which is looming by end of February. As these things resolve themselves, probably in a couple of quarters, we should start to see some kind of normalcy and upward trend in exports.
Okay. Good morning, Rakesh. Hope 2023 is fabulous and much better than 2022 for you and everyone at Bajaj Auto. Let me parse the numbers on the domestic front. Even over there, it's actually a little lower than last year, only 2%, but not really upbeat. And I'm comparing like to like. It's not because of December. I'm comparing December to December. Can you give us the nuances, what did well and what didn't?
Well, morning, Lata. The December one-on-one is really not a good month to compare. Okay. Because even when it comes to the industry, I find that, December retail sales are generally inversely proportional to the festive sales and how close the festive has been. Because, there is so much of action during the festive. There is the inevitable advancement which takes place. So it is better to compare the quarter. Otherwise, we get sort of mislead. There's a lot of noise in a December to December comparison. So from that perspective, I think the most heartening thing about about quarter three is that the industry has returned to growth, which was declining over a couple of 2-3 year period, is finally now showing almost a double-digit growth. We expect that trend to continue. What is even more heartening, and particularly from our perspective, is that the top half of the industry is growing quite rapidly, if I may say so, 25 to 30%, whereas the bottom half of the industry is actually declining. And when you put the two halves together, we are seeing about a 10% odd growth in retail terms. From our point of view as to what has gone off really well and why we're not sort of getting distracted about just this December number, is that in this period of October-December, we have completely rejigged our portfolio. Okay. So if you see the top half used to contribute 45% of our business in, let's say, FY22. Now 65% of our business is coming from the top half, and that is a result of a slew of new product launches, including a complete refurbishment, renovation of the Pulsar platform, which is the 150cc plus, which has been accepted by the customer. And that is very good because, that has given us a huge increase in market share in that segment in these months. We have also made a very, very significant introduction, which may not have hit the news, but it's a very significant introduction in December as a play for the bottom half, where we have introduced for the first time in the industry an ABS feature on a 110cc segment. And we were listening to the customers, and there has been a lot of discussion about, and you would have picked it up in the media about safety and number of two-wheeler accidents, etc. So this is a move to, try and sub-segment it, appeal to those customers who are very safety conscious, introduce another dimension besides mileage and price in that segment. And that has just got introduced, and we will be looking forward to expanding it in the next few months.
All right. Hi, good morning, Mr. Sharma. Give us some insights on that. The 110cc ABS model that you've launched, I think it's the Platina. What's the initial feedback that you've got, the initial response that you've got? And also, the other point I want to focus on is select peers have gone ahead and increased prices in the last week or so, effective January 1st. Are you all pushing through a price increase?
Good morning. Yeah, you are very right. The model is the Platina 110, where we have introduced the ABS feature. It is early days to give you a ground level response from the customer, but we are sort of anecdotally, we are picking up that it is hitting the spot because safety is actually on top of everyone's mind. But that customer has to sort of get educated on what ABS can really do. A lot of the accidents are attributed to the skids and the slips, and which a feature like ABS can really mitigate. So we will be engaging with the customer and informing them. But wherever we have been able to have that kind of engagement with the customer, we've got a very good response. But I would say that we should give it about a month before we can come back to you and your viewers and tell you about how the progression of ABS is going on.
Price increase? Any price increases? Price increases?
Sorry, you had asked about the price increases. You see, we had taken most of our price increase in step with the commodity cost movement, and we had completed it, just before the festive. However, looking at the competitive moves and what's the sort of gap, we also have increased our prices in some segments from 1st of January.
Okay, I want to talk a little more about what's happening in the EV space, because there are some new battery norms which are coming through from April. Will the Chetak be able to comply with those new standards in time? And what are the production ramp-up plans that you have for Chetak? Also, any new two-wheeler EVs that you're looking at this year?
Yeah, so there is a very good engagement going on with the government on the norms as well as the testing, etc. And we will be conforming to all the requirements which are there. Particularly because, over the last 1 year or so, we have made considerable progress in localization, which means that there are a lot of elements of the Chetak, a lot of components of the Chetak, which are now within our control. So therefore, when that happens, your ability to make changes, etc., is really enhanced. So we don't have an issue from that point of view. It is, a very robust vehicle, and it will perform to all the standards. It is already performing to those standards and will continue to do so. In this quarter, we are looking at, a very different kind of a play in EV. We're working along with our strategic partner, Yulu. We are looking at, low speed and mid speed kind of vehicles, which are used largely for short distance deliveries. It's a large and growing market in the urban areas, and a Bajaj designed, Bajaj manufactured vehicle will be in play along with Yulu in the January, February, March period. So that should open up a new segment. And then, of course, as we go forward, we are having a healthy product pipeline under the Chetak brand, and we will expand the portfolio as we get into the second half of the year 23.
Overall, Rakesh, will margins do better? Because what you're speaking about is a premiumization trend. Usually, higher value-add products do give better margins. How might the year end?
Yeah, you're right, Lata. The entire genesis of our strategy to rapidly accelerate the top half was actually margin driven, and we felt that that's more of a blue ocean kind of a play. And it because there are different dimensions on which you can differentiate. You can upgrade the customer rather than being just price. Look at price and attack the lower half. So I think the margin story in each of the businesses, which is the domestic three-wheelers, domestic motorcycles, and the international business, the three big businesses, the margin story in each of the businesses will improve. However, when you look at the corporate end of it, as you know, at the corporate end, it's a blended margin, and exports has a higher overall margin, but its weight will fall. So how exactly we land on the margin depends on the sort of weights of each of the businesses. Though the three-wheeler business is showing remarkable growth, and our market share is just sort of gone from 70s to the mid 70s.
So when's the three-wheeler EV coming?
Like I said, by end of this financial year. So we're trying to see if it can come in Feb, but certainly in March.
All right. All the best for that. Thanks a lot for joining in, and have a great 2023. Of course, we'll keep chatting very soon and intermittently through the year. But